All right, so the FOMC meets this week, and the conventional wisdom is there will be no change in the rate, policy rate. It will, though, be interesting to learn the latest thoughts on the economy and maybe hints of the next policy move will be. My next guest says that the stagflation dilemma, that is a real possibility. I'm going to bring in now former Atlanta Fed President, Georgia Tech, distinguished professor Dennis Lockhart. Dennis, so the stock market lurched in the free fall last time Jay Powell spoke, and this was sort of one of the things that he said toward the end. And part of this, he says, we may find ourselves in a challenging scenario where our dual mandate goals are in tension. And I bring that up because, you know, it's one of these things that it feels like a lot of people always say, you know, this is the only central bank in the world with this sort of dual mandate. And how do they handle it, particularly in this environment? What are your thoughts?
Well, I think Jay Powell in the quote that you have on the screen indicated how they're going to handle it, and they can't give an answer today. It depends on the relative severity of the deviation from goal or target of the employment side versus the inflation side. We can't really know yet whether inflation is going to be worse than employment, or layoffs and unemployment is going to be worse than the inflation picture. He's saying that they'll make that judgment at the time, and it will depend on severity, the time to return to a reasonable target, all of those considerations.
In 1987, Arthur Burns published a piece. It was titled The Anguish of Central Banking, and many of the issues that he talked about, I think, are relevant now. In fact, the Federal Reserve sort of paradox, and yet despite their antipathy for inflation and the powerful weapons they could wield against it, central bankers have failed so utterly in this mission in recent years. In this paradox lies the anguish of central banking. Now, of course, the 70s were tough, but you know, when the Federal Reserve was created in 1913, it was created with the promise that we would no longer have these boom and bust cycles, that inflation would never necessarily get out of control. So what do you make of the Fed's role in our economy? And is there anything that can be done to maybe help it live up to some of the initial hype?
Well, the Fed's role and the tools the Fed are important, but they're not decisive. We've seen in recent years supply shock that came out of a pandemic. That's not something a central bank can either easily anticipate nor do much about, except react in the moment to try to ease financial conditions. But when you get very, very unusual economic developments like a pandemic, for example, the Fed's tools are limited. The Fed's tools really affect overall demand in the economy. And that's when you get something that's related to supply, which we may be seeing in the coming weeks, the Fed just can't solve every problem.
So let me ask you, because he also talked about the benign neglect, and of course the current account deficit, benign neglect, and again, the value of the dollar, protecting the value of the dollar, or maybe that's what they do. This question of current account deficit, it feels really prominent right now with what's happening in Washington, D.C. Now, there's some smart guys I know. Bob Elliott put out a piece like a week or two ago saying that the current account deficit, which began in the 90s, the flow of foreign capital in the U.S. has allowed consumption to outpace production for nearly 4 decades. I guess that sounds good until you need to produce something. And then Cullen Roche, another really brilliant guy, says about current account deficit that it's the reason why the U.S. stock market is now 60% of the global stock market, and we become the wealthiest nation in history. And here's my problem, Dennis, with that. We are the wealthiest nation in history, but the way it's distributed is we don't feel wealthy, the people who live here. Last week, McDonald's reported their earnings, and the CEO said that traffic for the entire industry for low-income consumers were down nearly double digits, and the same for the middle class. And the only people that held tough were higher-end folks. So when a country, only rich people can buy a Big Mac, is there something wrong here?
Well, there's a lot. You've covered a lot there. Let me start with trade deficits. In my opinion, Charles, A big trade deficit is an imbalance, but it's not nearly as serious a matter as, for example, a budget deficit that then contributes to the debt of the country. The resolution of a trade deficit may not happen soon or ever, as long as, in our case, as long as the US dollar is the global currency and is accepted around the world. So I just don't view it as a serious imbalance, or at least not as serious as fiscal imbalances. You point to distributional questions in our economy. They've been with us for years. They continue to be problems. We have a very wide distribution from very low income, poverty-stricken people to billionaires. That's to some extent the product of our capitalist system. Yes, it's a problem. The Federal Reserve cannot really do much about distribution. The Federal Reserve can try to manage the overall pie, but how that pie is distributed really is much more of a fiscal and administration matter than it is a central bank matter.
All right. I got 30 seconds. Let me just ask. I saw your note about the tariff and ultimately the tariff levels are. I'm just going to spitball 10% for the world, 50% for China. What would that mean for the economy?
I think that'd be a very serious matter. I hope the outcome is much, much better than that. There's a lot of soft data and discussion going on, and I'll feed off of that to some extent. But some of what I'm hearing now is that in mid-June, we're going to see an inventory cliff, particularly related to products that come or have come in the past from China. That inventory cliff could produce the bankruptcy of small businesses that depend heavily on Chinese goods. This is not necessarily a good thing.
Right.
Certainly not in the short term.
Right.
I'm hoping for a resolution, a de-escalation that brings the tariff levels down to historic levels, which is much below even 10%.
Yeah, that would be phenomenal. I think everyone would applaud that if we actually had honest, fair trading rules on both sides, including non-tariff barriers. Dennis, I wish we had more time. I always appreciate your integrity and your knowledge. Thank you very much.
Thank you, Charles.